Well, good weekend all. I'm Epstein, and here we are with your weekend edition of your Spider ETF stock market wrap-up. And this is for Friday, the 7th of March, 2025. Now, first statement. As I told you earlier, at the beginning of the year, I split vacations. I rarely go away at Christmas time or New Year's. I'm here for that, and I'm here most of the summer. It's rare that I'm gone for more than a week, and that's it. And so I like to take at the beginning of the year a couple of days off, and I generally break them now in the 4-day holidays. So like I'm going to be gone until next Friday. That's all. And I'll be with you next Friday morning that we'll be doing these videos. For my subscribers, I do put out the morning subscription videos wherever I'm at so that you're able to see what it is. I admit I haven't put out a lot of trade recommendations. Today we tried in the gold market, and I don't mind saying it, a buy signal. Didn't work. The risk was 44 cents or 43 cents, and that was the stop on the trade, and it just didn't work out. I want to take those. I mean, I'm going to keep going after markets that I like, but with very small risk, $1, $2, 40 cents, whatever it is, and trying to catch the moves. Because the markets have dropped so much, you're getting to points that they're going to get interesting. We are not bottom pickers, at least I'm not. What I try to be is a trend picker, and the gold had to close even stronger than it did today, and it just didn't do that. It was up 14 cents. I needed this market up more than that, and because of the pattern in it slipping back to the 267.64, had to evacuate the position. Doesn't mean I don't like the long side, I do, but the setup just wasn't there. There are no major government reports due out on Monday. You're coming to the end of the earnings season, as you know. We've seen a number of the retailers come out, and there are some good sales that are coming out from some of the retailers and terrible on the others. The confusion in the market, of course, is by design of President Trump, who every other day seems to be having a press conference and confusing the heck out of all of us with what are the tariffs. Today at 6 in the morning, I was glued watching TV. I think it was Scott Bessent was on, getting a feel for what he thought of the market on CNBC. And then we were watching Navarro come on, and he had ideas. And then Trump came on talking that he was going to slap tariffs on Canada as early as today, Monday, Tuesday, or today. He said it could be today, it could be Monday or Tuesday. I have no idea what happened with him saying that he just gave everybody a reprieve for 30 days, but maybe that's on the autos. Maybe that's on something else, because now he's really upset, he said, with lumber and milk tariffs. And those tariffs on milk, 250%? He can't get away from that. And it's, he says it's hurting American farmers. Okay, I'll let you deal with that over the next few days, but we'll deal with all of it tonight. So let's go to the market and something new. I asked yesterday for you to give me ideas, and one of you liked Devon Energy, and it's something that I watch anyways. They engage in exploration, development, and production of oil and natural gas properties, and they operate in the Delaware Basin, Eagle Ford, heavy oil, Barnett Shale, Stack, and the Rockies oil. All right, got the areas. So it's an interesting company that's been on a huge decline. So you're looking at a market that's gone from $55 to $30. I like when we start looking at markets like that develop sideways action. Either it's building for another down leg, or if it starts clearing these highs, we might be at a bottom area finally in the market. Is it a bottom right now? No. The break this week carried you under the 3302 level. Until that happened, you had the pattern of higher lows. You had already made the higher high. Unfortunately, this break put you back, as swing lines go, into no man's land. Higher high, lower low. When we take a look at the 18-day average of closes, because that's my pivot that I use. When the market's under it, I have a bearish bias. When it's over it, I have a bullish bias. The bias means if I get buy signals, go with them. If the bias means if I get sell signals and you're under it, go with them. But if you have a buy signal and you're under the 18-day average, you don't go with it. So in order to get me going, I don't see anything here that can get me all excited. That's the point that I'm seeing right now on a weekly basis. And when I get back, I'll cover the dailies. I've already done the charts for you. And if I'm going and I can do one of those in the evening and get a review going because I'm bored and I got something else, nothing happening at that point, I may do it. Again, I'll be out west, so I've got a little bit of extra time. Higher, high, lower, low. I didn't have that last time because I was out east and everybody wants to go to dinner. And as it works out, I'm rushed. Okay. I don't see anything here in the Bollinger Band. Momentum-wise, we're not overbought, we're not oversold. So I'm viewing the market with everything is neutral. I wish I could say it's bullish, it's bearish, it's out of the bear trend, but it hasn't begun a new trend. That's the words that I want to use. Remember in Dutch Brothers, I pointed out on the daily chart, you could drop down pretty far. Go to your daily chart and see where it fell to. That number tied in with this weekly 18-week moving average. You had lost the bullish embedded reading, and you fell right down to where you should go. Let's applaud it. This chart's acting great, technically speaking. It is not in an uptrend. It has broken the back of this huge rally. It now has to reestablish itself. Maybe that's the right word. In Netflix, could we be headed to the $800 level? You're at $891. I don't know. There's no trend. You've got a higher high and a lower low. The bias is down. The market had lost, and you can see this, the embedded reading. Let me just show you this. Here you are with everything embedded. When you lose it, you're probably going back to the 18-week average of closes. Market exactly did that this week. And now the question is, does it have more in it, or is this it? What's hurting the market is the budget came out for how much they're spending on new movies and shows and so on. And people got nervous about it because it's a big number, but they're the service, so they can get away with that. We'll see. MCHI, this took off. And why? Again, the People's Congress is going. China's throwing money at this, all right? This is where they're going to throw money. They're going to throw money. They don't want America to run the AI or the internet. They want to do it their way, and they will do it their way, all right? These are bright people. If you've seen one of these BYD cars, I haven't been fortunate enough to see one. I have friends abroad that have seen them and they love them. They say, all right, it may not be exactly the high end, maybe of a Genesis, which some people think isn't still high end enough, and that's a South Korean car, but it's there. And that's important, all right? But now they're able to do this with internet. And Baba came out, and Alibaba that is, and they came out and they said that like DeepSeek, they have made another software product that uses even less resources than DeepSeek does, acts faster, and does the job better. I want to keep hearing that because as you get into that, and we get this, and we will, if you don't think we will be able to break that engineering and figure it out, shame on you, that does happen. But with our chips, we can do more. And they need those chips because at the end of the day, the chips, not the software, say how fast you can go. The software makes it smoother. The chips give you the horsepower. In Home Depot, all right, now I'm looking now for where this market's going to start bottoming out. Interest rates are not going up. They've softened out. We've come down. If the home market doesn't improve, we're getting to the spring markets in much of the country. You've got to rebuild the hurricane areas that got hit on the East Coast. I have no idea what's going to happen in California. I have no idea. I think it's too soon. I think the insurance companies are still there. I haven't heard anything that they've cleaned out the mess, that they put back in the infrastructure. That probably has to happen before any builders can get anything doing. I'm not saying that's for every home, but I am saying it's large swaths of the area. So don't know that that's why we're slipping there, and Lowe's and some of the others. Uber, I like the pullback. I already have booked a Waymo trip for myself as I'm in the West Coast, and it's all booked out. So I'm with my buddies, and we're going someplace and then it'll take us back. I'll let you know how that is, what the experience is like. Higher lows, higher highs. We'll see where the market is through here. It's fighting a battle, as you can see, and overbought. I can make an argument for pulling back, but I like this. I think you're going to see traders at 69.73 be interested in this market. Why? Because you'll probably slip at that point and get away from being overbought. A non-overbought condition is going to get traders interested. You take out these lows right here, and I got to change my mind. So anything under, say, 64, that's problemsome in the market. In KRE, the regional banking, look at how this has come apart. Kaboom. But for me, if you were sitting next to me and I were tutoring you, you're down to the 200-day average, the Bollinger Band, you're oversold, you're short. The market's been on a short spree. Why are you hanging around? Today's the day. Pick up your chips. You'll say, we could go to 50, 75. So pick up 75, 80% of your chips, 90%. If you get that, terrific. Playing for that, not the game that I like. Same thing in XLI. Notice how you're making your run at the lower band. It's more markets on the downside. It's one after the other. And I don't know that this goes away so fast. Why would you at March 14th or next week when I'm back get all of a sudden real bullish when April 2nd's right in front of us? What happens with the tariffs? Do you think the initial reaction is bullish, these markets? I'm just throwing this out for you to start thinking about. XLE on the energies, you could still be going to 83, 81. Your momentum's just turning down. I don't see anything super bullish here. We'll see what happens with them. In the dollar, you've broken through the 100-day average in the Bollinger Band. Will you be able to stay there? The market's already in oversold territory. Be cautious right here. I think the pros took money off the table on a weekly chart this week at that combination. In the gold market, you can see they had the inside day. If you take a look, you're still embedded here. You've got the numbers embedded. Week 1, this week, I'm going backwards. Week 2, the week before, and week 3. So I'm still very friendly in the market, not back here. It stayed there. But the trade that I was initiating was off the daily. Believe me, I was torn to write my traders and say, hey, the weekly's embedded, why not trade it? But why turn a 44-cent risk into a potential $4, $5, $6 risk? There was no need. When you have a game plan and it doesn't work, the hardest thing you will have is following it. You'll go, oh, I can make my 43 or 44 cents back. I'm not interested. I'm truly not interested. The reason you entered was for a reason. If you don't have the discipline to follow your plan, you get hurt. And then what happens, let's assume it rallies next week. You go, I knew I should have stayed. No, you don't, because that could still be the $6 risk. Suddenly you've taken a 40-cent risk and you've taken it, what, 15 times the amount? What's the point of that? In the copper, on the weekly charts, you've come down. If you saw the futures, you could see how you went up to the upper band. These are in two different worlds. And I mean two different worlds. You have higher high. I think you want to just sit here. And by the way, you have the lower low. I don't see a darn thing that you should be doing in that market one way or the other. So for me, I think you sit back. This is a week, and I'm lucky. I'm taking off in a week where I don't see a lot of setups that going boom, at least not right now. Maybe they'll come, but I'm not seeing them. Take advantage of the free offers that we have. Our research that we put out, my own research. Try seasonals. You're going to love them if you've never seen them before. And SeasonX lets you do them on individual charts, so stock charts. So you might really like that. All of our offers are there. You put in your name and all. After you complete what you want, it comes to us. IRAPstein.com, free offers. Look in the top left. Move your cursor to the top here. With that, I'm Ira. I'll see you a week from today on the 14th of March. Trade well.